For Morningstar, I'm Jeremy Glazer. We got new housing starts data this week, and I'm here with Bob Johnson. He's a director of economic analysis to see what it means for the future of the housing market. Bob, thanks for joining me today.
Great to be here today.
Let's look at this housing start data for October. How many new homes are being built?
Well, we're running at just over 1 million units right now, and the number today was a little bit below what some people were expecting, but it's really not a bad number, and it's not very far off of trend. We've come a long way in the housing market. We were at 500,000 starts at the bottom of the market, and now we're running right around 1 million units. That's still well below the 2.2 that we saw at the peak of the last boom, and even below the 1.5 million units, which everybody kind of thinks is the standard ongoing need based on how many households you form, how many houses get blown over or destroyed every year. That's the number that's really more normal. So we're still a long ways from that.
What's the split between construction in single-family homes and multifamily? Any big differences in the trend there?
Yeah, I think that's always an interesting thing to look at. And really, there isn't if we have 1 million starts, probably 600,000 of them or so, round numbers, are single families, and 400,000 are apartment homes. And multifamily homes. And clearly, we'd like to see the single family do better. That's kind of a bigger driver of employment and economic activity than apartments. And there we're not really much changed. So the news there isn't particularly good. It isn't getting worse, but it's not accelerating dramatically either.
So we're seeing some pretty flat data there. When you look at permits, which are even before the starts, any sign that there's some acceleration?
Unfortunately not. Those numbers are even flatter. And by the way, I do like looking at the permits data better than the starts data. Everybody focuses on the starts. I like to look at the permits. They're much less volatile. They get revised much less. They tend to be a better predictor of the health of the market. The starts, if it gets too cold and there's 2 weeks where they can't lay a foundation, and then you don't have a start that month. And so while the starts may be in a range of 800,000 to 1 million over the last year, permits might have been in a narrower band of 900,000 to 1 million units. So that's why I really like looking at permits. And there, boy, the numbers are almost unchanged year over year. So there really hasn't been, in the new home market in any case, very much of an improvement.
And that's true for both single family and multifamily.
Exactly.
So is there any then signs on the horizon that there could be anything getting better for housing? How do we get to that 1.5 number that might be more normal?
Yeah. I mean, this year will turn out to be not a particularly good year for new home activity, and it's a bit of a disappointment. We've made it up in some other categories that we can talk about, but it didn't do much this year. And I'm thinking next year is going to be a much better year. It may be the spring selling season till we see it. But here's a combination of factors that are lining up. We got the Builder Confidence Index this week, and that moved rather sharply from 54 to 58 in 1 month, which is kind of a big 1 month move, and the kind of the high of this recovery has been 59. So that seems to indicate they're seeing more activity and that they're feeling more optimistic, which is usually a good sign. So I'm optimistic on that front. Rates are down to stabilize, so that had been one of the things that had been holding the market back. There's a lot of talk. We haven't seen necessarily all the action that will back it up, but we've seen some loosening in lending standards, which has been one of the things that's been holding the market back. We've seen better employment and income data, and that tends to drive more housing activity. So you roll all of those together, and I think we're going to have a better year for housing, new homes, next year. If this year was the year of an existing home and of rentals, I think next year is going to be the year of the single-family home.
We are just talking about new homes then. What about the existing home market? What does that look like?
Yeah.
Do you expect that to continue to be supportive?
That's been we've had a very good year in existing home sales, and I think that will probably continue. I think that new homes, because of higher labor costs and so forth, have kind of gotten a little bit priced out of the market. So I mentioned all those positive factors, but certainly an existing home is a little bit cheaper for the same amount of square footage. So I would think that existings will continue to do well as people kind of see these giant increases in rent and trying to find a way around them, and certainly one of them is buying an existing home. And I hope to see more of that in the next year.
And then what about remodeling, things like that also go into that housing GDP calculation?
Yeah, I mean, the housing GDP number has gone up from at the bottom at about 2.5% up to just over 3%, and it typically averages around 5%. So again, we've still got a lot of runway room on that one. And I've said this recovery, we've kind of shifted it around a little bit. The commissions on existing homes have been a bigger contributor to that number than in the past. And certainly remodeling is beginning to act a little better again, and that certainly helped the number a little bit after holding it back for a while. Nobody wanted to invest in a home that was underwater. Now some of that remodeling business is coming back, and we saw that in some of the results from Home Depot and Lowe's this week, whose underlying fundamental businesses were both relatively strong. Certainly one of them had an issue with a data breach. It created its own set of problems, but in general, I think they speak well to the remodeling market, which may be a bigger contributor than it's been in the past.
So overall, what's your expectation for housing over the next, say, year or two?
Yeah, I think that we're going to see some improvement. I think this year was a big disappointment, and luckily there were a lot of other things in the economy that kind of kicked up and made up for the softness in housing, which was still up, just not as much as everybody thought. I think now that everybody's kind of written off housing, that actually 2015 might be the year where housing kicks in a much bigger way than it did in 2014.
Bob, thanks for your thoughts today.
Thank you.
For Morningstar, I'm Jeremy Glazer. Thanks for watching.